Hi, Sean Keenon here from the Legends Realty Group with the first video of our series on buying a home. In this video, we're going to discuss a few different things. When you should get pre-approved, deciding your budget, deciding your area, deciding if you want an agent or if you want to go it alone, setting up automatic notifications when homes come on the market, and how much you should expect to spend out of your pocket when you buy a home. Let's get started. First, when to get pre-approved. You should speak with at least 2 different lenders. Ask them questions about their process, such as how long they need to close a loan. What are their loan fees? Many people don't want to get pre-approved because they don't want it to impact their credit score. That's a fair thing to be concerned about. It isn't the end of the world, though, to have a credit check done every 3 to 6 months. But in my opinion, you should have them do a full pre-approval once you are getting serious about looking for homes. Even if you don't buy a home right away, you need to know what your actual budget is, and that pre-approval is usually good for about 3 months. It's very hard to give you an accurate estimate of your monthly payment without doing a full credit check. Next, decide your budget. Your lender will be able to tell you what your maximum payment can be. If you want it to go up, they may be able to tell you what you can do, such as pay off a credit card or a vehicle loan in order to increase your purchasing power. That said, make sure you understand your budget as far as the purchase price and the monthly payment, because sometimes you will actually qualify for a higher price point than you're comfortable making a monthly payment for. Next, decide your area. Plan for the next 5 to 10 years. What life events do you think may affect your home needs? Do schools matter? Are you anticipating health or mobility issues? Do you want to be where growth is heading, or do you want to be where everyone currently is? Next, decide if you want an agent to help you or if you want to go it alone. Obviously, as a real estate agent, I think you should have an agent, but let's discuss some of the reasons or the most common reasons why people don't. Number 1, they feel like they might get a better deal if the seller doesn't have to pay a commission to their agent. This may actually be true if you go directly to someone who is selling the home themselves. If they have an agent, however, most of the time it won't make a difference. Our listing agreement with the seller states that the seller will pay the agent X amount of dollars of the sales price to find a buyer. It then states that the agent will agree to split a percentage of the commission with a buyer's agent should one be involved. But if there's no buyer's agent, the listing agent gets to keep the entire commission to themselves, still costing the seller the same amount. In rare circumstances, a listing agent may state in their agreement with the seller that they will reduce their commission if another agent is not involved, but that is rare. 2. They don't want a used car type of salesperson hounding them every 5 seconds with commission breath, trying to get them to buy whatever home they'll say yes to. I 100% agree with avoiding this situation. In my opinion, that just means you need to find the right agent to help you. Go online and search reviews of agents. Ask a friend. Call around and interview some agents without giving them your primary contact information. Number 3. They think they can do it by themselves just as well, if not better than an agent. If that's your thought process, give it a shot. I'm not going to try and talk you out of it. Next, set up automatic notifications for new homes that come on the market. Make sure to decide your like-to-haves versus your must-haves. You can have your agent set these automatic searches up for you based on your criteria, such as total square footage, bedroom and bath minimum or maximum, age of the home, school district, and many more. You can also set these searches up for yourself on sites like Zillow or Realtor.com. This will automatically notify you when a home matching your criteria comes on the market. Side note, only exclude properties that don't fit your must-have criteria. If you exclude ones that don't fit your like-to-have criteria, you may miss a great home that was perfect aside from that one item. Next, how much money should you expect to need to buy a home? First, let's talk about your down payment. If your credit score is around 700 or higher, you may be able to get away with a 3% down conventional loan. If not, you may be better going with a 3.5% down FHA loan. Each option has its pluses and minuses, so discuss those pros and cons with your lender. Either of those options, however, will have mortgage insurance. So if you want to avoid mortgage insurance, you will need 20% of the purchase price as a down payment. There may be exceptions to these numbers, but they are a good general guideline. Second, let's talk about your closing costs. You will need about 2 to 4% of the purchase price to go towards your closing costs. This is in addition to your down payment. This can vary depending on timing and area though, so part of your closing costs pay for interest on the money you are borrowing for the remainder of the month in which you close. So if you are borrowing money for just one day and closing on the last day of the month, you will only be paying for one day's worth of interest. If you're closing at the beginning of the month, you are borrowing money for the entire month and will owe interest for every day of that month. The time of year also will matter for such things as property taxes or HOA dues. If the seller has already paid these costs for the year, you will owe them for the balance of the year in which you are going to own the home. As far as area goes, each county also has its own property tax rate. For example, Gwinnett County has about a 1.23 tax rate, while Hall County is closer to a 1.1 tax rate. Third, let's talk about out-of-pocket costs during the transaction. Depending on which inspections you want or need, you will likely pay about $500 or $600 for a home inspection, which in my opinion is not something you want to skip. You may also need a septic or a well inspection if you're on a property that isn't connected to city services. There are many other inspections to consider, such as pests and so on. That will be up to you on the property that you're actually buying. The other main out-of-pocket expense during the transaction will be your appraisal. This will be about another $600 or so. These costs may be allowed to be put on a credit card, but please do yourself a favor and ask your lender before doing this. Something that simple can screw up your entire purchase process. Hopefully you found this video helpful. This is just the first video in our home buying series. So check out our next one where we will talk about making an offer on our home and how to make your offer as desirable as possible to a seller, while also keeping in mind some tricks that can help protect you along the way and maybe even minimize your out-of-pocket costs. Thanks for watching, and I'll see you again soon.